We're good? Guys hear me? Good? See me? All right. We're good. Great. Ladies and gentlemen, I'm going to discuss why China finally gets a win. We have a new week, new earnings, new market, lots of great news ahead. We have so much more to discuss, including how we traded Apple on Friday and what you could do for the rest of the week. I am Mark Melnick. This is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. We're going to share with you how we crushed Apple, why the news flow is actually coming back to an actual full gear, which is why I have this smile on my face, not because I look absolutely obnoxious in this green hoodie. And we have so much more to discuss and so many great things. But first, I have a message from you from above that you must memorize everything here. Pause this video, read it forwards, backwards, middle to beginning, middle to end, beginning to end, and end to beginning, and everything in between. And only once you've memorized every single word may you hit play on this video. Thank you so much for taking years out of your life and doing that. I do appreciate it. And you might be sitting here. This is just a regular Ralph Lauren hoodie. You might be sitting here saying, "Mark, why are you wearing this hoodie right over here?" So no, I'm not trying to be Kermit the Frog, nor I'm trying to be silly. I'm trying to say I'm trying to stay green as I can, based on what the market has been doing recently. And we have so many great things to discuss here today. And there was a really cool thing we did earlier today. It's called an evolutionary video. As we did it, I went ahead and I shared it in my Facebook thing at T3, and it actually garnered a lot of things. It's called Newsbeat Live Evolutionary Gathering #1. It's on Facebook and YouTube. I did it earlier. It basically shows you how the market changed and how I actually read earnings after they report to capitalize on it. And it's been a phenomenally consistent thing when you play the stock after the report, not before. I've been playing a lot of things before the report. I've been playing most of these things after the report. So, as I promised you on Thursday, because we do the Newsbeat show the night before trading, so we do Sunday through Thursday night. So the last Newsbeat show was Thursday night, and we were telling you how we were going to trade Apple. And basically, I'm going to just take you back to the screen because I promised you guys win, lose, or draw. I was going to go over it. And here is what we said. We said, step one, choose Apple. So that kind of narrowed down what you had to trade. This was from last Thursday. And I basically said, can you trade for the first 10 minutes and make a living? And that is the title of the one and done strategy. And I said, after the first 1 minute bar closes, keep looking for the stock to break out of the top or bottom of that first candle. So you wait for, if you're East Coast, you wait for 9:31 a.m. You have to wait for the first 1 minute bar to close, and then it breaks up, you buy, breaks down, you sell. If it does break the top, simply buy in. Breaks the bottom, simply short in. Take your profits, happy trading, make money. Can you make money in the first 10 minutes of trading? Let's go ahead and take a look. So this is what happened with Apple. Here was the first 1 minute bar. We ended up breaking through 209.70 right here, which was the high of this first. This is a 1 minute bar. And Apple ran from 209.70 all the way to 213.65, or right over here at 213 and a half in about a little less than 12 minutes or 11 minutes after the first 1 minute bar closed. And a lot of us were able to crush it. I actually wanted to talk to you guys about some of the earnings names because a lot of times, early on, there could be very wide spreads and you could get very weird fills, especially with option market orders. And nonetheless, if had a little bit of patience, what's a little bit of patience? I mean, you're pretty much up money right away, and you see nothing really breaking, nothing really scary in the chart that's breaking you down. So I ended up crushing Apple on Monday, on Friday, doing exactly what I told you I was going to do on Thursday because I just ended up buying into this. So congratulations to everybody who made money on Apple on that day using a very simple methodology. Now, if you're smart, you would, when you have a chance, definitely go ahead and take a look at the evolutionary video. It's well over an hour. It's an hour 15-minute video, and I discuss like a lot of really, discuss a lot of really great things in the video. Let's see if I could just share some of the things that we did. I'll be able to find them. I'll be able to find them eventually. It's somewhere on my computer. But we basically were literally breaking down reading earnings like into a science. I'll just show you a little screenshot of it right there. And it basically shows you how to read a stock after earnings. And then I said, judge the earnings as if you were Judge Judy or any judge. And basically, I share with you the trick when judging earnings is to ensure that you have the three bright spots. And the three bright spots are actually, it's a scientific thing. So there is never an opinion. So when I say earnings suck or earnings are great, it's not my opinion that the earnings suck or the earnings are great. Based on my methodology, it either has some of the points that I literally list out for you, or it doesn't. There's no opinion in it. And the beautiful thing about removing an opinion is it allows it to be more of a science and an art rather than an op-ed or an opinion piece, so to speak. So definitely take advantage of that. So we have a lot of earnings coming up this week. We have a lot of great news flow. We have so many awesome things for you, so many awesome things for you coming up. And I just wanted to go over some of those things as well. So I'm wearing this green hood is because there is no reason for the market to be bullish anymore. And I know I've been so doom and gloom. And again, I was definitely one of the people at the forefront of this down move. I'm not, Captain Hindsight on CNBC. And, we're already beaten up. And I'm talking from this point forward, of course. I'm talking from this point forward. Yes, I do think there are things in the market that could potentially save us. But here's the deal. Here's the deal. If Apple has bad projections, what does that mean? Well, if Apple can't do it, no company can do it. That's the point I'm making. Apple infamously becoming the first $1 trillion company. If I am not mistaken, they should be underneath a trillion now, based on this recent down move, right? It's still being listed as 1.002 trillion, so supposedly it's at a trillion. It was obviously under a trillion at one point, and it's not the fact that the trillion number is important. It actually isn't. It's just more of a thought process that if Apple, and I go over all of these earnings throughout the evolutionary video, so watch it because I discuss why Apple earnings were actually so bad. And I was giving a really great example. I was given a great example, and I want to share this example once again. I was basically, there was this mother from one of the moms groups or children's groups or parents groups, whatever, that they have here in New Jersey, and she had this kid, and as I was saying earlier today, if the kid was just running around and like hitting other kids and smacking them, and I'm looking at him like. I go up to the mother, and the mother, of course, is glued to her phone like this, and she's just sitting there with her head in front of her face, in front of the phone. And I'm sitting there like, lady, your son is, you know, hitting other kids. Like, go do something because, my kid was there, and I was thinking to myself, like, If that was my kid, what would I do? And like the first thought that comes to your mind as a father, granted I'm a human and I'm smart enough not to act upon every single one of my urges or instincts or thoughts, my first thought process was to crack the kid in the face, but he's 3 or 4. Like I'm not going to hit a kid 3 or 4, but that's your first instinct to like defend your own kid. So my next instinct was to go to the parent and be like, "Ma'am, your kid is hitting others, and I'm going to show you why this is important because this actually might be describing you, analogically speaking." So the lady was like, "No, my kid, my kid would never do that." I'm not going to say the kid's name. He's like, "He would never do that." And I'm like, and so I look her straight in the eye, and she's still there with her phone. Like off to the side, like trying to pay attention to me and the phone at the same time. I look over at her phone. Guess what she has up? Facebook. And I'm like, so obviously it wasn't important. Um, but what if it was yeah, whatever. Obviously it wasn't important. She was like on her wall or something. And I'm like, well, can you please? I'm like, lady, I have 20/20 vision, you know. I saw exactly what he's doing. Your son is hitting other kids. You should really stop him. He could hurt someone. Like trying to appeal to her sensitive part. So she goes over to her kid, and I'm, of course, eyeballing this whole situation. And she's like, we'll call the kid Jimmy. It's not his name. She's like, she's like, Jimmy, you would never hit somebody, would you? You would never do that, right? You'd never do that. You would never do that. And I was like, oh my God, this lady is nuts. The point I was making with this is that sometimes you have traders who will look at a stock and they'll point out everything good. They'll look for the good in everything. And there's some points where looking for the good in everything is a positive thing. I believe in that general outlook in life, but I do believe there are exceptions to the rule. And when I was sitting there and I was bashing every Netflix analyst, everyone from JP Morgan, Goldman Sachs, Citi, all the Netflix analysts that I was just ripping apart, if you remember, on Tuesday night after they reported and they gapped up, and then they came out the next morning. Then I ripped them again, and I was ripping all the analysts that upgraded Netflix, and I was saying Netflix earnings are bad. Do you realize how many people were like, their subscriber growth was good, their this was good, their this was good, their this was good? Everybody was completely blind to the fact that Netflix earnings sucked. Now, do you want to know why I say Netflix earnings suck? Do you want to know why I say Apple earnings suck? Simply search on either go right to the Facebook Live page, just type in Newsbeat Live Evolutionary Gathering #1. I mean, I'll show you a picture of it. It's in the top right here. Newsbeat Live Evolutionary Gathering #1. It's gotten a real like I will literally show you why an earnings is good or why a certain set of earnings, you know, suck. And I break it down to a science where it's not an opinion, where if you actually follow the science, you're like, Mark will like this earnings, Mark will not like this earnings. And you'll know because I show you 3 easy steps of how I judge it. And the beautiful thing about how I judge it is it creates actually trading opportunity. And I show you how to take advantage of that. So definitely do that. So we crushed Apple. We're going to have a ton of great intraday stuff for you, coming out. I'm phenomenally excited. Let's talk about what kind of news flow I got on Friday. So somebody was reading the report of LetterX. You don't even have to trade it. So we were giving LetterX here. A news guy came out right over here when X was around 2760, right over here, and he's like, out of nowhere, guy I haven't spoken to for months. He's quiet, very quiet because the news guys basically know how I roll. It's simple. Give me something really good or shut the front door. Don't don't need to hear your half-ass plays. Just give me something good. And they all know that. So everybody was silent. But on Friday somebody spoke up out of the blue and I was like, I didn't know what happened. E2 Brute? And they came out for me and they were giving me X saying that their conference call was very good. They were analyzing the conference call. The stock ran from 27.74 to 29.10 from 9:40 to 9:51 in 11 minutes. Letter X ran about $1.40, give or take, in 11 minutes. That is the type of good news flow, people interpreting things during the earnings report, people doing these things. That is why I am really pumped up about trading, not just this week, but till the rest of the year. On Tuesday, ladies and gentlemen, we're going to have we're going to have the midterm election results. And if you try to avoid U.S. politics, A, God bless you, because it's engulfed and entrenched within our populace, and it's going to definitely create some interesting opportunities for our traders. We're definitely going to, the momentum is actually going to remain extremely strong um, into trading. And I'll tell you right now, if it comes into where it's like a 50-50 win, where Dems take one side, Republicans take the other, I'll just come out and I'll say I humbly believe the VIX are going to shoot up. Would I buy the VIX? Not in a million years. And by I mean VIX as well. I'm showing you VXX. Was it just VIX? How do I? Yeah, here we go. Here, VIX. I mean, the VIX is going to explode. I humbly believe during this election period if it's a 50-50 win. And that is, of course, what polls are predicting. We'll see its accuracy, but why it excites me? Again, I could give, you and I will never have a say on U.S. politics. Let's just call it what it is. No matter what you believe in, no matter what you think, no matter what you like, no matter what you dislike, all we can do is do better for ourselves. So when it comes to U.S. politics and elections, I implore you, focus in on your trading. That is the only thing you can control. You can't control who wins, who loses. I hate to tell you, your vote actually doesn't make a difference unless you live in like one of 8 or 9 states. Yeah, hear it from me. Just it means nothing. Your vote, I mean, I'm in New Jersey. You're in New York, you're in New Jersey, your vote means nothing. And not to make it sound so gloom, actually, quite the contrary. I'm phenomenally excited about the opportunity that this market is going to bring during this period of time. So, being part of the Newsbeat Live Room is going to be more of, let's put it this way, news flow comes in cycles. I humbly believe we're starting the cycle again, especially when I start seeing things like Letter X. So, it's definitely going to be a time to make a ton of money. I'm going to share my thoughts on Trump meeting President Xi because that is another market moving event. And I basically said in the beginning of this, China gets a win. Now, one thing that no analyst is talking about out there, and that's why I guess you guys tune in to me. One thing that no analyst is talking about out there is very simply, oh God, oh, that's much better. One thing no analyst is talking about out there is basically how China won a round against us. Now, US versus China, we all know US is going to win that trade war, meaning who's going to get more hurt, US or China? It's not like the trade war benefited the United States financially. It just basically says we could hemorrhage out a pint of blood if you hemorrhage out 5 liters of blood. And not to use pints and liters, but basically, I get punched once in the face, you get shot twice in the kneecaps. And that is the kind of thing that's going on. With the fact that Apple had bad revenues, why isn't anybody talking about that China actually won around? Why do you think China had bad revenue? Excuse me, Apple. I said China. Because of China. Nobody's talking about why China's outlook fell. Why? Because uh, the iPhone unit sales, a weaker outlook. All right. Remember, if you remember 2 earnings ago, I incorrectly predicted Apple was going to gap down on earnings. I said they would gap down on earnings based on bad iPhone sales. They announced bad iPhone sales. They were plunging after hours, and then they were like, "We're going to do a $200 billion plus repurchase program, whoosh, all the way back up. And I'll never forget that day because it just shows you that as long as there's somebody willing to throw practically infinite amounts of money towards, it's going to move higher. And throwing $200 billion at Apple, which was at the time like a 850, $900 billion company, would shoot it through the ceiling. So, also another thing that I haven't seen in years was the analyst Jeffrey Caval. When was the last time you remember any analyst, real analyst on Wall Street, putting a lower target on Apple than where it was trading? I don't remember it in, I don't know, 10, 15 years as a trader. Jeffrey Caval. I know I bash analysts. He is a respectful analyst. That's hard to read. I'm going to read it for you. Apple price target lowered to 185 from 215 at Nomura Instinet. Analyst lowering his price target for Apple, keeping a neutral rating, saying Apple's compounded soft Q1 guidance with reduced disclosure raises a specter of a sustained iPhone downturn. Now, anyone want to know why? See, nobody talks about this. Nobody actually wanted to speculate why Apple's outlook was in such a large range. And I'll share with you that range. They said 89 billion to 93 billion. $4 billion, give or take. And nobody actually wanted to tell you why Apple suddenly put in that range. It's because Apple has no idea what will be the results of the US China trade war. And I will tell you what's going to be the results of the US China trade war. It will resolve. It will resolve, and it's going to resolve this month. And by resolve, what do I mean resolve? Are we going to remove 100% of the tariffs on each end? Hell no. But we are going to move in the first step in the right direction, which we haven't done since the entire trade war began. How's that for a prediction? And the reason we're going to do that prediction is because China has a bargaining chip at the table. In China, the Chinese culture, for those who are very unaware, is very deep on respect, is very deep on honor, is very deep on saving face. That is completely different than American culture. The beautiful thing of two cultures colliding. And the fact that China actually has a bargaining chip on their table with our top companies, all with reduced revenue, they're going to come when President Xi and President Trump meet at the G20 or whatever it is, and they sit down and meet. I can pretty much tell you how this conversation is going to go. President Xi and President Trump is going to be like, "Yo, what's up, my man? Yo, what's up? Yo, how you doing? Oh, President Xi is going to be like, "Yo, you want to solve this already, or you want to watch Apple go to $140? You tell me, bro. Yeah, our economy will suffer. You know what? We have we, we have internment camps. We have all this stuff. The majority of our people don't have electricity or plumbing. We will. I don't care. I don't care if we have to go through this downturn. I care, but not enough to actually lose face over it. Trump's going to be like, damn, I'm running, one of my big platforms are running on a stronger economy. So how can we meet in the middle now? Now Trump will be forced to meet a little closer to that middle ground. So before, if this is the US and this is China, China was getting so decimated. Look at every Chinese company. Look at the entire Chinese market. China over here had to go like over here to meet in the middle. They had to go like over here. Now they can be a little closer to the middle. That's the best way I could analogically describe it. And you know why? It's because of not Netflix too, but especially because of Apple. China is also intertwined in Hollywood. China doesn't like that Netflix is going down in value. That hurts China. Now, instead of focusing on what we didn't have in common with China and its agreed upon tariff structure, now we have to look at how do we both save face and make it seem like we're two respectable leaders that came out of this and did the best for our countries. The topic of conversation changed. Had Apple kept their revenue guidance high, I do not believe this conversation would be happening right now. in terms of, yeah, they're going to meet at the G20 regardless, but I don't think it would have a positive outcome in which I'm predicting right now. See, that's what nobody is talking about. It's not that people suddenly said, you know what, I'm sick and tired of Apple products. I'm sick and tired of using their services. It's not like Amazon was like, you know what, we just see a slowdown in our growth. It's not like Netflix is like, oh God, we just can't make earnings anymore. It's not like Google's like, oh, we don't know about our revenue in the future. This is China showing the United States that and I'm using the FANG companies as an example here. Maybe Facebook is excluded from this mix because they're not in China whatsoever. But I will tell you right now, everything is connected with each other. Baba is like where a lot of the garbage on Amazon is being sold. It's bought from Baba, which connects these Chinese factories will make extremely low quality cheap products or higher quality products for cheap. Both, they do both, and they will dump them on Amazon. So think of it like this. If Amazon is buying less of that Alibaba stuff, that hurts Alibaba, and Amazon is selling less, that hurts Amazon. Amazon will be advertising just a little less when it comes to those things and those individual products. I know that Amazon's ad revenue has been going up. That is not what I am saying. I'm saying when it comes to those products, it has been going down. When those things go down, guess what? Facebook is not posting as many advertisements. Other websites aren't producing as much advertisement. Other websites start not making as much money. It trickles down from the very top. Pretty much, how do I say this? It's like somebody farts on top of the tree and the people on bottom say it smells like ass here. That's what it's like. Everybody gets affected. Everybody, it's just like the pyramid structure goes down. It's like it's like pouring a glass of water on the top of a pyramid and it just goes down all the corners, all the ends, and it just goes all the way down and it hits everything. That's what it's like. And for the first time, and I really mean for the first time, only because of Apple, only because of one company, we are being shown that our economy, there's at least the underlying threat that our economy is unsustainable. It used to be when the market shot up, when the Qs went from $100 to 120, nobody asked why. 120 to 140, 140 to 160, 160 to 180, nobody asked why. But now it goes from 180 to 160, and everybody's like, holy shit, we're in a bear market. Why is that? Well, a lot of people are just saying this is a buying opportunity. A lot of people saying a shorting opportunity. But I will tell you this, our economy cannot be where it is. Now, I still think we're in a phenomenally powerful economy. And again, I take a completely unbiased, non political approach. I look at the numbers. Again, just simply the numbers. And the numbers of the economy still look phenomenal. But you have to realize if the Qs went from $100 to 140, you'd be like, the market is phenomenally strong and everything looks great. But if the Qs go from 180 to 160, and I'm using the triple Qs as an example, use the S&P. If the S&P goes from 2,000 to, let's pull up the chart right here of the S&P just so we can, let me just refresh this real quick. I want to show you something of how funny people are. So right over here. So here, you know, it's funny because when the S&P back in 2017 went from 2350 all the way to 2850, nobody batted an eyelash. Nobody stopped and said, "Why is the market shooting up like this?" But as soon as the S&P 500 went from 2900 to 2600, trading higher than the 2350 was prior, now all of a sudden we could be in a bear market. Are we in a bear market? Depends on the definition of how you define a bear market. I don't like the word bear or bull market. I think it's a cop out. I think when people say bear market, I think they're trying to say um, oh, we went down 2 consecutive quarters or we dropped 20%. Everybody has their own definition, and you could stand by your definition, but the truth is, I've heard dozens of definitions from very professional traders. I'll approach it like this. I'll approach it like this. On a 50-50 election win, and nothing comes out of this G20 summit, I believe the triple Qs will have a full leg lower. A full leg lower. What does that mean, Mark? What does that mean, Mark? Let me spell it out for you in terms of the S&P. I hate being vague, and we're talking like before the end of the year. You know, not one of those imbeciles who predict the bear market for the last 10 years, and they come out of the woodworks every time the market drops 3% or more. But let's put a number on it, right? Okay. How about S&P 2500 before the end of the year? Do you consider that a brave call? Do you consider that a brave call? The S&P 500 is $2,723.06 as I speak. Is putting a $2,500 target on the S&P a brave call? See, I'd rather hear somebody say that than say we're in a bear market, because somebody saying you're in a bear market means nothing. Should I be shorting here? Should I be buying here? Is the bear market over? Were we in a bear market? Are we still in it? Means nothing. Now remember, I'm giving you what if situations. I'm going to have a much clearer path for you in the market after the G20 summit and after Tuesday's elections. But I will say this, regardless, if this market goes up or down, I can guarantee you, I've watched the Nasdaq go from 5,000 to under 2,000. I watched the Qs go from $120 to $19 and change, all the way back to $180. You know what? If you were trading since 99, you have seen, I don't want to say you've seen it all, but you've seen enough where you can make comparisons to anything that happened prior to 99. You want to talk about what was it called? The huge market collapse in the 80s or 70s or whenever it was. We've seen similar things. We've seen flash crashes. Yes, it's on a different degree, but like I don't want to say I've seen it all, but I've seen enough to know that this down move may not be short-lived or ephemeral by any stretch of the imagination. How's that? And maybe something else happens. Now, can this rally come back? Can we get a relief rally if if President Trump come out with some agreement that at least insinuates that additional tariffs and additional things won't be attacking their economy? I do believe so. So a lot rests in the balance in these geopolitical events. These geopolitical events will shape the market. That's the only reason why we're talking about it. If it didn't, as they say, opinions are like butts. Everyone has one. But, pun intended, when it comes to the market here, I have a pretty clear direction of where we're going to go based on the outcome of the following events. Now, if you're here to make money, I have good news for you. Regardless of the outcome of any of the events I told you, we're going to have increased volatility, increased news flow from this point forward. Not what happened already. You know, any 3-year-old, 4-year-old can look and say, "Oh, well, it went down." Are those red bars going up or down on the screen? They're going down. They're just as smart as every other, guru out there all of a sudden. But I will tell you, we're going to get a phenomenal increase in news flow. We're going to get a phenomenal increase in substance in the market. And trading is going to be really good again. Simple Newsbeat levels. Figured I would share some of those with you. You want your algorithmic levels for tomorrow in this psychotic market. You want to know where the true support and resistance levels are for every major name. Go ahead and take a screenshot. Take a snap with your phone. Do whatever you want. Record it. It's here. It's for you. Enjoy it. Take advantage of it. In terms of what I'm watching on, in terms of what I'm watching for tomorrow, damn right I am. Apple bearish through Friday's low. Of course I am. Are we really going to be moving up higher prior to elections on Tuesday and prior to the fact that Apple reported the worst earnings I've seen in years, despite them people telling me, "Oh, it's the best earnings because I had the best September." Read my evolutionary class. I'm going to show you why that's full of doo-doo and not true. I'm looking for Apple to break Friday's low. Here's Apple. Here's Friday's low right over here. 205.43. I want to see a smooth move through 205.43 to the downside. I'd like to see Apple break 200 bucks. That would be fair. Trigger 205.43 for a short in Apple. Put should work really well on Apple tomorrow. My humble opinion. We'll see. Maybe the market doesn't even gap down, right? We'll see. That is what I'm giving you guys. How about my Forex? My Forex idea. Not ideas, idea. Right over there. There you go, ladies and gentlemen. Euro Great Britain pound to buy. This is a live screenshot from my live trading software. I actually print screen and copy and cut it out, so that's why it looks like this. Here's where I'm looking to enter. Here's where I'm looking to get stopped out. Here's where I'm looking to take profit. Very simple, very easy on the Euro Great Britain pound pair. So, with the increase in volatility, I will say this, it's going to be a lot easier to be consistent intraday than it is going overnight. There's going to be so many things in headlines that can throw you off. Be careful. You don't have to be the first person in something. Don't feel like if you watch your stock, drop from $100 to 80 to $75 and then it goes from 75 to 85, I don't need you to feel like you missed out on a long move. Instead, understand that there is going to be a lot of drama coming into this week. There's a lot of drama. There's obviously the midterm election results, which will happen by Tuesday. There's obviously President Xi meeting President Trump, and who knows what kind of rhetoric is going to go back and forth. You have to remember, like let me remind you what happened on Alibaba. Let me remind you what happened on Alibaba on Thursday, where they were supposed to meet and not going to meet. And I'm going to show you a 15-minute of Alibaba from Thursday just to show you what a headline can do to a stock. And here it was, President, Trump is going to maybe do more tariffs on China. Alibaba went from 145.20 to 138.62, and then came out and said, no, we're going to meet in whatever. And then it went from 138.62 to 152. You are dealing with so much drama where a headline is going to move your stock. You don't need to find consistency doing that. Stick with the intraday, stick with the Newsbeat live names are going to give you phenomenally high consistent ideas. Stick with the news flow. You stick with those things and you're going to close out this November like a true champion. I hope you guys enjoyed the Newsbeat live show. Happy trading, make money. We'll see you guys tomorrow morning on the Newsbeat live trading broadcast. Have a wonderful evening.